Out of Disney's earnings call. Let's get right back to Julia Boorstin with that. Julia.
Scott, Disney CEO Bob Iger kicking off the call by announcing a restructuring. They're going to be restructuring Disney into 3 new core business segments. The first one is Disney Entertainment. That includes all TV, film, both streaming and direct-to-consumer, basically all content with the exception of ESPN. That division will be co-run by Alan Bergman, who's the longtime Disney studio chief, and Dana Walden, who's been running the TV division. This new ESPN division, which includes both streaming and linear and international sports, will be run by longtime ESPN chief Jimmy Pitaro. And then there's the third division, which is Parks, Experiences, and Products, same division that they've had for a while now, and that is run by Josh D'Amaro. Iger going on to talk about how this new leadership structure aims to return authority to creative leadership, to make those same leaders accountable for how their content performs financially, and to enable creative teams to determine how they're making content, how it's distributed, monetized, and marketed, saying that this structure will be implemented immediately, but they won't start reporting that with this structure until the end of the fiscal year. Now, another key thing here, Iger announcing they're targeting $5.5 billion of cost savings across the company. $2.5 billion of that will be non-content costs, saying that $1 billion of that is already underway. The remaining $3 billion in savings will come from reducing content spending when it doesn't, but not including sports. So reducing non-sports content spending. Also announcing that as part of this, they will be laying off 7,000 employees. Iger saying this is a decision he's not making lightly. Also announcing as part of this restructuring, they will no longer be providing subscriber guidance for their direct-to-consumer business as they focus on growth and profitability. But he did reiterate the goal and the target of hitting profitability for the Disney Plus business by the end of fiscal 2024. Scott, the call is continuing, and I'm going to dial back into it now.
Just real quick, so he's taken a page out of Reed Hastings' book, right, with no more sub-guidance. That's number one. And number two, are you surprised by anything that is part of this restructuring into 3 core units?
You know, I think this really makes sense here. We've talked a lot, Scott, and we were discussing it earlier, this idea that he wants to put the creative control back, you put all the financial decisions back and aligned with creative control. And so this idea that he's really reversing what Bob Chapek did. Bob Chapek was about separating out the content creation business from the content distribution business. Iger says that doesn't make sense. You need to have financial accountability, and you need to incentivize the people who are making the content to come up with the decisions that are going to be the wisest and most fiscally responsible in terms of how to monetize that. So aligning those interests very much makes sense to me, particularly understanding how important content is as a creative engine for Disney. Iger saying in the call that everything about Disney, pretty much everything about Disney, originates with the power of its content. And then I think that looking at the people who are running these divisions, it very much makes sense. And I think that the cost cutting is in line with what a lot of people were looking for, pulling back on the content costs and also trying to figure out some other streamlining. They didn't give that much detail about the cost cutting, but I'm sure we'll hear a little bit more on the call, which is ongoing.
I see what I see to this point is like $2.5 billion in cost cuts and $3 billion coming in cost savings out of content.
In the content business. Yeah. So non-sports content cost savings. So the question there is that because they're going to be spending less on content just for Disney Plus? Is it going to be more about trying to pull back in other parts of the business? Or is that going to really be about achieving profitability for Disney Plus? So I think that's a key question that'll surely be asked by analysts on the call.
All right. I'll stop asking you questions so you can get back on the call. Julia, thank you so much. It's Julia Boorstin with the latest.